2024.
And health experts say the country may soon see the endemic state of the COVID-19 virus. Let's begin our broadcast with the Bangko Sentral conceding that the weakening peso has been fueling inflationary pressures and that this strengthens the case to, quote, act decisively. BSP Governor Medalla says that while the Bangko Sentral does not normally react too much to movements in the exchange rate, the peso's depreciation has been adding up to the build-up of inflation risks. The local currency closed at 58.965 on Wednesday, that's October 12, shedding 10 centavos from its previous close. This is just 3.5 centavos away from the peso's record close of 59 against the greenback on October 10th. Year-to-date, the peso has weakened by more than 15% or nearly 8 pesos.
The Bangko Sentral has so far raised interest rates by 225 basis points since May, bringing the policy rate to 4.25% in a bid to prop up the peso and to arrest soaring inflation. Governor Medalla admits that inflation would likely exceed the central bank's 2 to 4% target for this year and in 2023. Meanwhile, the Bankers Association of the Philippines said it will work with the BSP to fight speculative activities that tend to thwart and hurt the economy. Now, the World Bank Group says it's ready to increase its support for the Philippines, especially in the sectors of agriculture, education, tourism, water, and energy. This announcement comes following the meeting of Finance Secretary Ben Jokno and World Bank Group President David Malpass on the sidelines of the IMF World Bank annual meetings in Washington, D.C. The World Bank is currently supporting 15 ongoing programs and projects worth $4.96 billion in areas like transport, rural development, disaster risk reduction and management, and COVID-19 response. As of March, the World Bank was the Philippines' third largest source of official development assistance, with its loans and grants representing over 23% of the total.
Now, as economies struggle to regain their footing after the pandemic, the International Monetary Fund warns that, quote, the worst is yet to come. According to IMF economic counselor Pierre-Oliver Gorinchas, 2023 may feel like a recession for many people. Gorinchas says global shocks from this year are set to reopen economic wounds that were only partially healed post-pandemic. This as parts of the world continue to grapple with the effects of Russia's invasion of Ukraine, as well as interest rate hikes over in the US. The IMF earlier trimmed its global GDP growth forecast to 2.7% for next year, that is from 2.9% previously. A third of global economies are seen headed for a contraction, while big economies like the United States, the European Union, and China are expected to stall.
Dire tone coming from the International Monetary Fund, and that might actually be an understatement. They're warning of a harsh recession if the fight against inflation is mishandled. Will the Philippines come out unscathed, or will we just be as wounded as the rest? Joining us for insights, Alvin, chairman of Ateneo de Manila University's Department of Economics. Prof. Alvin, good day. Thank you for joining us. Again, the IMF warning that 2023 will feel like a recession for a third of the global economy. Are we immune from this? How sound are our macroeconomic fundamentals to actually withstand recession?
Good morning to everyone. Thank you for inviting me to share my ideas and our analysis. Well, we can generally agree with the IMF. There is, the global fallout from the interest rate hikes of the United States and the Western European countries, and the inflation pressures brought about by the Russia-Ukraine war will really be a drag to growth in many countries, including the Philippines. If you look at our relative strength, while we are only 40% exposed to the global economy, our biggest challenge is that we draw and import a lot of our economic requirements, particularly food and oil. So that those two major items comprise about 30% of total imports. That brings you a lot of pressure moving forward to 2023.
Okay. Now, sir, one way that at least the government or the Bangko Sentral has tried to fight inflation is via monetary policy, at least inflation expectations. But the IMF has now cautioned against the risk of miscalculation between financial and monetary policies. To what extent do you believe that the BSP is in that regard? How much more room do they have in this balancing act between over-tightening and under-tightening?
Well, the BSP can only do so much. No, money supply management is only one part. No, this has to be both a fiscal and monetary calibrations. Excuse me. So on the fiscal side, you really need to ensure that that supply of basic goods and services that the economy requires must be in place, because inflation is not just a question of too much money going around the system. It's also availability, affordability of these goods and services. So the BSP, I think, has already been doing its part. Now we need to go and see how the fiscal side respond and supports the BSP in this regard.
Sir, I just have another point that I wanted to raise with what you mentioned earlier. You did mention that we are at risk of some pain, especially next year, in line with what the IMF has said. But we also did see quite high consumer spending, and especially growth even in the first quarter of this year was higher than expected. The second quarter a little bit less than that, but nevertheless still 6%, and some are saying on track to that 6.5% goal of the government. Is this now under threat? Has something changed in just these few past days?
No, what we are seeing is a rebound from the 2 years of the height of the pandemic. So you will naturally see growth.
Okay.
But for that growth to be sustainable, it has to be broad-based. It cannot be just a few sectors contributing. And our economy is dependent a lot on, even if they want to spend, they will be more or less dampened by higher prices. And so that it is manageable and it will not go double digit. I think that's a major focus right now that the government, both monetary and fiscal policy, must be addressing.
Okay. At the same time, you have BSP Governor Medalla saying, there's now more reason to actually act decisively, as of course the peso's weakness further drives inflation. Is this a little too late in the game here? What more can the central bank do?
Well, it's just that the impact of the U.S. interest rates have been so high and so broad across the world that it was also so fast. And so the ability of the economy to respond is also calibrated in that sense. But then the BSP, I think, has already followed basically. So if the US continues to increase interest rates, then the BSP will increase interest rates. But then they will also have to manage the foreign our currency reserves in that regard, because the further increase in the exchange rate between the peso and the dollar adds to what the governor already said, adds to the inflation pressures, primarily because we import many of our critical elements for our economic production.
Now, sir, Governor Medalla is actually quite optimistic about inflation waning down, projecting it to temper mid-next year as these rate hikes, of course, kick in. But then we do see the second round effects, the transport fare hikes, and of course, this issue of the energy crisis and possible, and again, just the supply crisis in terms of agriculture. How optimistic are you that the predictions of the governor will follow through by next year?
Well, the BSP, I think, is looking at it from a base effect, but looking at the base effect, you really will see some kind of softening unless there are drastic shocks that comes in from now until the middle of next year, which it's no longer a shock. What we are seeing is the gradual increase of inflation, and it probably will be like this if there's no more sudden shock that comes into the system. But like you said, we don't know what happens to energy. We don't know what happens to the supply. We don't know until when the U.S. will stop increasing interest rates. So these things are beyond us. So We can only hope that in between, from this time up to the middle of next year, we already have a semblance of this kind of normalcy, as we can say.
Oh, earlier you mentioned that the BSP is already doing its part. It's now on wait-and-see mode on whether the fiscal side will also pick up, including non-monetary interventions. But do we have enough fiscal space for that? Especially now, you have the IMF warning that many countries are in or near debt distress. Do you see us within that path as well?
Well, the fiscal space, we already know we are, not only us, but the rest of the world is in a very tight fiscal space because of the expenses incurred during the two years, the height of the pandemic. But that doesn't mean that you will not adjust for that, because honestly, the challenge that you have is not just government's problem; it's everybody's problem. So, in this particular context, fiscal space does not necessarily mean government spending, but giving the private sector more participation, allowing them to come into the system and provide the necessary funds. And in that case, in the context of the Philippines, we have to allow and become flexible in allowing foreign investments and allowing the private sector to enter and invest in many of these activities that can help prop up the economy. For example, the recent adjustment, the BOT law and the rest can help the renewable sectors, for example. They can help the energy crunch going forward, and the logistics sector can also expand. So this does not need government funds. They simply need government to provide the right environment and facilitate. So the fiscal space may be tight, but you can adjust according to the regulations and the way the economy is being managed.
Prof, finally, before we let you go, what is your growth outlook on the back of the statements from the IMF?
So, sorry, can you repeat that?
What is your growth outlook on the back of the recent statements from the IMF, sir?
Growth outlook for this year?
Yes, and also for next year.
For this year, we'll definitely be above 5%. That's very easily. We are going back to our 2019 size of the economy this year, and even beyond that. Next year will be tempered. We will not have the same strong growth that we have seen this year, but there will still be growth, probably at around 4 to 5%. Not as fast as this year. We probably will hit about 6 to 6.5.
All right, thank you so much for that update. That was, of course, Alvin Ang, Economics Department Chair over at the Ateneo de Manila University.
Let's now pause for a quick break, but coming right up after that. The MVP Hospital Group, now known as Metro Pacific Health, aims to have 40 hospitals in its portfolio in 7 to 8 years.
More of that and other stories when Business World Live returns. Stay with us.
You're watching Business World Live here in One News. I'm Delos Santos.
And I'm Danie, Laurel.
Production in the Cadlao oil field in northern Palawan is expected to begin in 2024. The Energy Department said the oil field can produce up to 5,000 to 15,000 barrels of oil per day. But the agency admits that this is just a dent in the over 320,000 barrels that the country consumes daily. Still, the government says this is a good start in encouraging more investors for oil exploration in the country.
The ultimate objective is to yield the maximum benefit to the Filipino people and at the same time to assure just returns to participating private enterprises.
The Energy Department expects an initial investment of $72 million in the two adjacent offshore petroleum exploration projects in the Cadlao oil field. The DOE earlier announced that the government allowed Nido Petroleum Philippines to proceed with the on-site survey for drilling locations by the fourth quarter of this year. Drillings will begin in 2023. The Cadlao oil field last produced oil in the 1990s with an output of 11 million barrels. The DOE says security will not be an issue as drilling area falls under indisputable Philippine jurisdiction.
And we have to assure you that these activities are taking place in areas that are indisputably within Philippine jurisdiction. In the case of Cadlao, for example, the drilling activities there began in the 1990s. And in the case of Severus Contract 54, the exploration activities took place there as well in 2008.
The Philippines may soon see the endemic state of the COVID-19 virus, that is according to infectious diseases expert Dr. Ronjin Solante. Solante says COVID-19 cases logged in the country have tempered over the last few months, not only in numbers but also in severity. Solante also no longer sees the virus putting a dent in economic recovery, as most establishments and public transportation have returned to 100% capacity.
This is based on the trends of cases, the trends of those who died because of COVID, and more importantly, yung mga na-admit sa hospital talagang bilang na lang, hindi na ganun kagrabe ang karami. It's not disrupting much of our life now, unlike before. So, I think it's near its end, or I should say, parang endemic na rin.
Meanwhile, the Health Department confirms that COVID-19 cases are plateauing in several parts of the country. However, when it comes to lifting the state of emergency, the DOH says there is still much for the Philippines to achieve besides a low COVID tally.
With this plateauing of cases, improved vaccination coverage, and minimal severe and critical and admissions in hospitals, we can recommend to the President itong lifting nitong state of calamity.
The country's garments industry warns of temporary closures and more worker layoffs amid a slump in global demand. This warning comes after around 4,000 workers were laid off by garment firms in Mactan, Cebu. The Confederation of Wearable Exporters of the Philippines said more factories may have to cut their workforce if demand continues to decline. They explained companies are now looking to shift their portfolios out of the Philippines and into other Southeast Asian countries like Vietnam, Cambodia, and Indonesia over high labor costs, logistics, and production flexibility. The group adds that over 9,000 workers employed by CONWEP members are temporarily on forced leave or have been laid off. This represents 3.5% of the 270,000 worker base.
The hospital group of Metro Pacific, which has been rebranded as Metro Pacific Health, aims to double the numbers of hospitals in its network in 7 to 8 years. This as the company vows to deliver better and more affordable healthcare to Filipinos. Mobile journalist Pamela Vasquez has this story.
The new heart of Filipino healthcare. After 15 years, Metro Pacific Hospitals, the biggest hospital group in the Philippines, has unveiled a new identity. Say hello to Metro Pacific Health. During the launch, MPH Chairman Manny Pangilinan vowed to invest in more hospitals and technology to provide better and more affordable health services to Filipinos.
It is such an important extension of our company's city invest in hospitals, as well as in building primary care chains and intelligence operations.
Since 2007, Metro Pacific Health has grown into a network of 19 hospitals across the country. It also expanded with more than 3,800 beds, 22 outpatient care centers, over 9,500 doctors and 16,000 nurses, serving almost 4 million patients annually.
We are probably just halfway in achieving our dream of a nationwide chain of hospitals and healthcare businesses in all key cities.
To 40 in their network over the next 7 or 8 years. Its current roster of hospitals include top-tier names such as Makati Medical Center, Cardinal Santos, and Asian Hospital and Medical Center. The group is now aiming to expand their services to Visayas, particularly in Cebu and Iloilo.
At Metro Pacific Health, we will create a very strong brand, the interconnected healthcare network, synergistically working together as one, as we treat each patient well at every touchpoint, at every opportunity.
MPH's vision is to become the country's leading and most valued integrated healthcare network. Meanwhile, Metro Pacific Health's new website, metropacifichealth.com, will be launched on October 21. Mobile journalist Pamela Vasquez, we are One News.
And those are the biggest stories in the economic and corporate front today. I'm Jess De Los Santos.
And I'm Danie Laurel. We are One News, all sides, all the time. But don't go away. We'll give you the latest on the local bourse and Businessworld Live returns. Stay with us.
And you're still watching Business World Live here on One News. Dan, is the equity space as gloomy as all the news that we had in the first part of the program? What with that IMF forecast?
I don't know any other answer, Jess, but just to see the charts, and you can see that indeed the pain has been pretty felt all across overnight in US. Of course, you've got the US shares falling to the lowest in nearly 2 years. S&P 500 closing at the lowest level since November of 2020. Of course, this is on the back of IMF warnings of global recession, stagnation in US, Europe, and China. But we've also got the inflation print over in the US coming out today, and that's of course Thursday, so markets are on wait and see mode. And if you take a look at our index, not really any different story here. 5,800 levels here, we're down by 0.2%. So really investors waiting on the sidelines. This is also according to AP Second Regina Capital. This is why nothing really has been going on. Still waiting on bated breath. What's the inflation print going to be in the US, and then what is the Fed going to be doing? Now let's take a quick peek at the movers here. You've got AGI leading, but is going against the tide here, up by 3%. Another Conglo, JG Summit as well, up by 1.6%. On the downside, however, you've got San Miguel and SM Prime. And finally, just how is the peso faring on the back of those comments of Governor Medalla saying that, they will do what it takes? It does seem to be the case that we are strengthening a touch back to 58 levels after, we did break 59 briefly on October 10th. So a bit of some strengthening there, 58.956 to the green patches.
But Dan, give us an idea here how one specific stock here is doing, and Metro Pacific Health, a rebrand here for Metro Pacific Pacific hospitals. How is MPIC doing?
All right. Well, MPIC as a whole, of course, it has the stake in the hospital group, but it does have, a lot of other things here. It's down by 1 centavo, so quite flattish here. But more on that, we did have that report. I just wanted to add one interesting thing here from Bloomberg. They did mention there's a total bed capacity of 3,800. However, only 2,500 to 3,000 beds are operational because of the lack of nurses. That is according to Palisok. So, another thing to be wondering here about how they're going to be circumventing that. But of course, this does come after the stock already rose by around 1.5% yesterday on the back of that news, Jess.
Top exporter of nurses, and yet we're
I know,
running short
let's try
of
to
nurses.
keep them here with more hospitals.
That's it for today, October 13, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News live anytime, anywhere. I'm Delos Santos.
And I'm Danie, Laurel. Stay safe, Philippines. We are One News, all sides, all the time.